The stock market has always been an interesting topic to talk about, at least for me. And I have seen people having so many misconceptions and doubts about it. There's a severe lack of information in this field. So, in this video, I am going to explain how the stock market works and why it exists in the first place. Like, what's the need of it? And I'll try to explain it in a way that it will be easy to understand. Now, suppose there's a company that needs some money for the expansion of the company, but it's not making enough money to meet that need. So now the company has two ways: either take a loan from a bank or some other financial institution, or sell equity to investors and raise money. You already know how loans work, right? So let's jump straight to selling equity. Suppose there are two promoters of the company, A and B. Uh, Promoters are the people like founders, co-founders, CEO, etc. So there are two promoters and they own a 50% stake each. Now the company is valued 100 crores. So now they go to an investor and sell 20% of the company to him for 20 crores. Now A and B own 40% each and the investor owns 20% of the company. And the money raised by selling equity will be used for the growth of the company. There are various stages of raising money from investors. Small startups get funding from angel investors, and when the business gets established and operates on a larger scale, it gets funding from venture capitalists. And when it becomes huge, then it does IPO. And this is where the story of the stock market begins. IPO means initial public offering. In simple terms, it's just the process in which the promoters and investors of the company sell their shares to the general public. Now let's understand how this works. Let's go back to our previous example. Suppose now the company is worth 1000 crores and it does an IPO. So A and B and the investor, they all decide to sell 10% of their equity each, which means that 30% of the company is being sold to the general public. And not only the general public, but financial institutions like insurance companies, investment companies, LIC, they can also buy and sell shares in the stock market. For IPO, the equity of the company has to be divided into shares. So let's assume the company decides to divide its equity into 1 crore shares. So if we divide that into 1 crore shares, the value of one share will be 1000 rupees. Now 30% of the company is to be sold, right? So 30 lakh shares will be sold in the IPO. But wait, how does the company sell its shares to the public? Through stock exchanges. A stock exchange is a place where buyers and sellers find each other and make transactions. During the IPO, the company sells its shares to the public through the stock exchange, and then the public trades it within itself. Currently, there are two stock exchanges in India: Bombay Stock Exchange or BSE and National Stock Exchange or NSE. So, this was all about IPO. Now, let's see how stocks are traded in the market. Suppose you want to buy 10 shares of HDFC Bank at a price of 1500 rupees. So now you need to find someone who is ready to sell 10 shares of HDFC Bank at 1500 rupees, for which you will have to place a buy order at the stock exchange. But you cannot do that directly. To place orders at the stock exchange, you need a stockbroker. A stockbroker is someone who just places orders at the stock exchange on your behalf. Some popular stockbrokers are Grow, Upstocks, Zerodha, Angel One, 5paisa, and so on. So let's assume you just open an account with a broker and buy the shares. But now there is one more problem, which is, where will you store your shares? Earlier, people used to get physical papers, which they could just keep somewhere in their houses. But now everything is digitalized, and so you need to store your shares digitally. You can keep your shares digitally in depositories. There are two depositories in India, CDSL and NSDL. Think of them like banks. As you keep your money in a bank, you keep your shares in a depository. And as you have a bank account in a bank, you have a demat account in a depository. You don't need to do anything extra to open a demat account. Your broker will do it when you will open an account with your broker. And you also don't need to do anything to get your shares transferred from the seller's account to your account, because that will be taken care of by your depository participant or DP. And usually stockbrokers also work as DPs. So in most cases, your stockbroker and the DP will be the same entity. There is one more body in this ecosystem, which is SEBI. Basically, SEBI regulates the whole market. It makes rules and regulations, guidelines, laws, and ensures everything works fine in the stock market. SEBI also investigates frauds and punishes fraudsters. In short, what RBI is to the banking system is what SEBI is to the stock market. If you also want to learn about how and why the price of a stock goes up or down, if you also want to learn about mutual funds, ETFs, futures and options, and anything related to the stock market, you can subscribe to this channel and I am going to make videos about these things. If you got to learn something new in this video, consider hitting the like button. I'll see you in the next video.